International sanctions have always played a pivotal role in shaping global economic landscapes, and for Forex traders, understanding their impact is more than just important, it's essential. When a major country faces sanctions, its currency doesn't just shift, it can plummet, spike, or become incredibly volatile depending on the nature of the restrictions. But how exactly do these political tools ripple through the Forex markets? Let's break this down. Sanctions are essentially government-imposed restrictions meant to influence political behavior. They might limit trade, freeze financial assets, or restrict access to international financial systems like SWIFT. Now, imagine a country like Russia, Iran, or Venezuela getting hit with these sanctions. Immediately, investors lose confidence, foreign reserves get locked, and the national currency starts losing value. That's a big red flag for traders, but also an opportunity if you know how to play it. Take Russia as an example. After sanctions were imposed in 2014 and again in 2022, the ruble didn't just decline. It crashed initially, then saw a surprise rebound when capital controls were introduced. Traders who understood the political motives and economic mechanics behind these sanctions had a clear edge. They anticipated the shockwaves, first the sell-off, then the artificial stabilization. The story doesn't end with the sanctioned country. There's a domino effect. Trading partners, especially those heavily involved in imports or exports with that nation, also feel the heat. Their currencies may get dragged down by trade imbalances or lifted as capital flight finds safer havens. Think of the euro or the Chinese yuan. They've been on both sides of that equation depending on the context. Now let's pivot to the trader's perspective. How do you stay ahead of these geopolitical tremors? It's not just about watching the news, it's about having tools that digest and act on that information with speed and accuracy. That's where solutions like the Trading Management Solutions EA come into play. While sanctions can cause chaos in the markets, this EA thrives on volatility. With features like automated trade management, real-time AI analysis, and customizable strategies, it helps traders navigate turbulent environments with precision. When a sanction-related event hits, there's a window of time, often very short, where the right setup can lead to significant gains. The Trading Management Solutions. EA doesn't just react, it anticipates. By scanning multiple pairs, identifying trend shifts, and calculating risk metrics automatically, it reduces the time you spend analyzing and increases the time your trades are working for you. Let's not forget about currencies like the Swiss franc or the Japanese yen. These are often seen as safe havens. When a sanctioned economy shakes the global tree, capital flows into these assets. A well-prepared trader who's equipped with automated alerts and strength meters knows exactly when this shift begins. Again, this is where automation is key. In highly reactive markets, speed matters. That's something manual analysis alone can't keep up with. And then there's the unexpected. Sometimes sanctions get lifted. Confidence returns, capital floods back, and the previously suppressed currency spikes. These rebounds can be just as profitable, if not more, than the initial collapse. But they're also riskier. Having tools in place to manage trailing stops, break-even levels, and partial closes can be the difference between locking in profits and watching them vanish. In summary, international sanctions create massive shifts in the Forex landscape. They introduce volatility, reshape investor sentiment, and alter the fundamental dynamics of currency pairs. The savvy trader isn't just watching these events, they're equipped to respond. With advanced tools like the Trading Management Solutions, EA, traders can turn these complex, fast-moving situations into strategic opportunities. Because in the world of Forex, the edge goes to those who not only understand the markets, but are prepared to act in real time.